All right, I see quite a lot of attendees have joined the webinar itself. So let's redo a sound check. If you guys can hear me clearly and see my presentation slides, can you drop a 1 in the chat box? Thank you, Sean. Thank you for the reply. Okay. A very good morning to all of you. All right. Um, it's uh, it's a very chilling weather this morning indeed. Okay, so this morning we will be going through educational webinar for exam. Okay, and presenting on behalf of Mr. Abramis. Okay, so over here we see this handsome guy over here with a big huge smile. So his name is Mr. Abramis. Okay, he is the founder and CEO of this Tradepedia and the educational material itself. All right. Okay, so for today webinar, okay, is on the major continuation pattern. Okay, we will be looking at some of the very common and very uh, pro tip of the major continuation pattern that trader use to play the price action itself. All right. So for this webinar, there won't be any Q&A questions at the end of the webinar. So if you guys got any questions, just feel free to immediately type it in the chat box below. Okay, it will be more of an interactive webinar where I will try to answer your question along the way. Okay, at the end of the presentation, if there are some time left, I will also go over to the trading view live charts to show you some of these continuation pattern that is in action for the currency pair itself. All right. So without further ado, let's get started. Okay, so for continuation pattern, okay, so these are some of the common patterns that is in the price action. Let me just take out my pen. Okay, so continuation pattern, if you guys have traded long enough, you guys would know that the price action does not go up in a straight line. All right. So what happened is that the price will zigzag its way up higher or lower. Okay. This is due to the fragmented nature of the price action itself. Okay. So for continuation pattern, okay, we have triangle. Let me just draw it out over here. We will be looking at triangle pattern. Okay, we will also be looking at wedge pattern. Wedge pattern, it's something like this over here. Okay, as well as pendant itself, pendant, and flex and rectangle. All right. So these are the 4 types of continuation pattern we will be focusing on today. Let me rub away all the drawings. All right, so first and foremost, okay, in order to have a continuation pattern, the prerequisite is to have a extended period prior trend. So that means that, okay, let me just take out my pen again. So in order for the price to go higher, okay, to continue higher, there should be a uptrend before that, consolidate, then go higher itself. Okay, so continuation pattern indicates a temporary pause in the trend. So in this case over here, the circular part is the consolidation period. Okay. So the next move will be in the same direction as the trend that precedes the formation. Okay, so after that, we see that the price break out from this consolidation and continue up higher. Okay, so let me just briefly explain why this consolidation take place. Okay, so if you guys if the price action is on an uptrend, okay, there will be a lot of people buying up. Okay, then until a certain point, there won't be any more traders that are buying up the market. Okay, so what happened is that some trader will take profit. Okay, take profit at this level, whereas those that miss out on the trend, right, they will buy up the trend. Okay, so this consolidation happen. Okay, for sometimes. Okay, for sometimes before it decide to break out from this consolidation to go further up. So that is the reason why this type of consolidation take place. You can see that when the price action reach this level, it will sell down. Then after that, there will be more traders buying it up, and there will be other traders looking to lock in the profit that makes the price go down. Then after that, those that miss out the trade will just buy up the price again to make the price go higher. Okay, so another important factor is the trading volume. So trading volume plays an important role in confirming this price action. Okay, so for forex, right, it's very hard to determine the trading volume. Okay, mainly because for forex itself is it's traded globally, and there are a lot of brokerages as well as provider itself. So this trading volume, more people will concentrate this trading volume on other instruments like equities, like stocks, rather than the forex itself. Okay. Okay, so this is what we have went through just now. Trying the most common trend continuation patterns are triangles, wedges, flag and pendants, and rectangles. Okay, so for triangle, right, there are three types of triangle. One is an ascending triangle. Okay, ascending, why is that? Because the price is coming in from the low, okay, into this triangle channel. So this will be the resistance level. Okay, this will be the level where the price sell off initially. Okay, then the price will sell off to this ascending trend line. So when the price sell off, it will find support. It will find support around this area, then bounce back to the resistance, then come back down to this ascending trend line support. Okay, so this consolidation take place in this triangle before finally the price action break out on the upside. All right, so this is an ascending triangle. Next is the descending triangle. All right, so for descending triangle, the important thing to take note is that the price should be coming in from the highs itself. Okay, from the top. Okay, then after that, it consolidated into this triangle, descending triangle channel. Okay, where the price bounced to the upper trend line resistance before facing pressure down to the support level, then back again to the resistance. Okay, so this consolidation take place inside a triangle before it finally breaks down to the lower side. Okay, and the third main triangle is a symmetrical triangle. Okay, symmetrical triangle meaning that, okay, both these, the upper trend line and the lower trend line are almost equal. Okay, so for this, right, what I noticed from previous my experience itself, okay, the price can either came in from top like this, okay, then come into this triangle channel, okay, before breaking down, okay. Likewise, this asymmetrical triangle itself, right, the price action can also come in from the bottom, okay, from the bottom before breaking out itself. So the harder thing about the symmetrical triangle is that it's harder to determine which direction will it break out. Okay, let me just write here. Harder to determine direction. Okay, please pardon my handwriting because I am using a pen itself. Determine either up or down. Okay. So I will show you some examples of the symmetrical triangle later. For symmetrical triangle, what you guys need to take note is that price action can break either on the upside or on the downside. This will only be there will only be further continuation after it break out of this triangle channel. Okay, as long as it's within this triangle channel, okay, it will be harder to determine which way it will break out. All right, so I hope you guys are clear about this triangle pattern. All right, let me take a minute to answer some questions. We have a question coming in from Navin. Navin asks, so trend in descending triangle always break down? Yes, for descending triangle, first thing you have to take note is that the price should be coming in from the top. Okay, like I said earlier, price should be coming in from the top. Okay, then they should form a flat support bottom. Okay, you see that this is a flat support. Then after that itself, you see the price action. It's reacting off against the resistance. Okay, then bouncing off on this support. Okay, then retesting this resistance trend line. Okay, consolidated until it's time to break down. Then it will go down itself. All right, I hope that answers your question, Naveen. Okay, moving forward. Okay, so over here, in this case, the symmetrical break out to the upside. Okay, let me just rub away these drawings. Okay, so next we will be looking at the bullish symmetrical triangle. Okay, so remember just now we talked about symmetrical triangle where the price just come into this triangle channel to do a consolidation. This pattern contain at least 2 lower highs and 2 higher lows. All right, so that means that in order to form a bullish symmetrical triangle, you have to have 2 higher highs, sorry, 2 lower highs. Sorry, okay, so 2 lower high is referring to this, at least 2 lower highs and 2 higher lows. All right, then when these points are connected to an apex, the triangle is formed. Okay, so volume should decrease as the price move within the triangle. Okay, so I'm a bit subjective about this. Okay, so sometimes the volume don't seems to decrease. Most of the time it will remain the same, around the same. Okay, so the breakout is expected to happen between the 2/3 to 3/4 of the width of the triangle. Okay, likewise, this point itself, I also find it very subjective, because in my professional trading experience itself, the price action can, this consolidation can take place all the way until the apex before finding the specific direction. Okay, so these 2 points, please go and back test it before you all take this into account, because these 2 points are quite subjective. All right. So moving on. Okay, the last point, I do agree, volume should increase as the market breaks out of the pattern. Okay, because why is that so? Because there will be a lot of traders monitoring this triangle pattern itself. So once the price action breaks on the either side, right? So traders will be taking in their position on the breakout. Okay, so mainly there will be breakout traders, okay, monitoring the price action breakout itself. So that is the reason why the volume increase. All right. Okay, so in this case, for presentation purpose, the price action just break out on to the upside. All right. Okay. Erasing all drawings. Likewise, for bearish symmetrical, okay, bearish symmetrical, it's an inverse of the bullish symmetrical triangle. Okay, this pattern will contain at least two higher lows. Okay, two higher lows, these two higher lows, and two lower high. Okay, two lower high. All right. When these points are connected to apex, a triangle is formed. Okay, this volume is quite subjective. This breakout also quite subjective. All right. So we see over here, the presentation slide itself is a bearish symmetrical triangle. Okay, where the price come into this triangle pattern, consolidate before breaking down to the downside. All right. Okay, so here is another pro tip for you guys to measure the bullish triangle. Okay. So for bullish measuring technique, okay, let me take out the pen. So we measure the height of the base of the triangle and extend that distance from the breakout point. Okay, so what it means is that first you identify the triangle. Okay, then you extend the line all the way to the apex. Okay, then after that, the second technique is to draw a parallel line to the lower triangle line. Okay, where the parallel line meets the apex, we know where the price will be and when. Okay, so for me, if you guys are confused with this narrative, for me itself, what I would do is that I would measure the distance from this point to this trend line itself. I would just do a copy paste in the trading view and map it to the breakout candle itself. Okay, so this breakout candle, when you map it, this will give a estimation of the price target that the breakout level will have. Okay, so one thing to take note is that this is just an estimation. Okay, estimation of the price target. Okay, sometimes if there are a lot of traders, okay, who buy this, who see this pattern and trade, right? There will be either a overshot above the price target or a bit lower than the price target itself. All right. So this will be just a estimation, or say estimation of the price target after the breakout. Okay, likewise for the bearish is exactly the same, just that is on the flip side. Okay, so we measure this distance from the high to the low, then we copy paste and map it to the breakdown level. Okay, over here, as such, they will give you a estimated breakdown price target level. All right. Okay, next we will be going to bullish wedge. Okay, bullish wedge. Okay, so for bullish wedge, to identify it, we need to find two converging trend lines that come together at an apex. Okay, so that means that this trend line showing over here as well as this lower trend line over here itself. Okay, so this is an intermediate pattern that takes more than 25 candles to form, but not more than 75 candles. All right. So this is also very subjective. Okay, this number of candle is subjective because it's depend on the the time frame that you are looking at also. So for example, if you are looking at a daily time frame, okay, daily time frame is forming this bullish wedge. Then after that, you narrow it down to H4 time frame. So there will be more candles inside this wedge itself. Okay. Likewise, if you are just looking at a H4 bullish wedge pattern, okay, H4, so there will be lesser candle inside this wedge before the breakout happens. Okay, so this bullish wedge has a noticeable slant to the downside against the prevailing trend. Okay, so what it means by that is that, okay, firstly, if you guys remember just now, before we do a continuation pattern, there should be a prerequisite that the trend should be on a bullish momentum. Okay, you see over here. Okay, the prerequisite is on a bullish momentum. Okay, before forming this bullish wedge itself. So after that, where the price breakout, it will be on the upside. All right. Okay, so a falling wedge is considered bullish. Okay, falling wedge is also considered bullish. I will show you. I hope I got some time to show you guys some examples later. Okay, like triangles, the same breakout periods and measuring technique also applies. Okay, so for this measuring techniques, it's quite subjective also, because I only find accuracy in the symmetrical triangle. For bullish wedge, it's quite subjective after I used to try out this method. Okay. So next, going forward, is the bearish wedge. So bearish wedge is exactly the opposite of bullish wedge. Okay, so what happened here is that this price action, come into this wedge, forming higher high, okay, and higher low. So after that, what happened over here? Higher high and higher low. Then after that, the price just broke down to the downside. Also notice that the prerequisite of this bearish wedge is before that, the price is in a downtrend. All right. Next, we will be going through bullish flags and pendants. Okay, the flag and pendant represent a brief pause in a dynamic market movement. Okay, they are preceded by almost straight line move called a flagpole, which happened on a heavy volume. Okay, then after that, price then paused for a few candles on a very light volume. The move continued on a burst of volume itself. Both patterns occur at about the midpoint of the market move. Okay, so let me just take out a pen and then briefly explain to you all. Okay, so what happened is that over here, the price action over here is it's just quite random. Okay, then after that, there will be a sudden burst of bullish momentum over here. Okay, so sometimes this price action, right, can be represented by the three white soldiers or the three black crows. Sorry, we are talking about bullish, so we just focus on the three white soldiers. Okay, so this flagpole sometimes can be seen together with the three white soldiers, the price action itself. Then after that, what happened here is the price consolidate. Okay, price consolidate because some traders will be looking to take profit, whereas others will be looking to buy into the market. Okay, buy into the trade. Okay, so once the consolidation finish, okay, once the consolidation ends, the price will continue its further uptrend. All right. So one pro tip for bullish flag, right? Bullish flags usually occur at the bottom of the chart itself. Okay, so meaning that, okay, so the price, let me just draw it down here. Okay, so the price action will be coming down. Okay, then until it find a certain support level, okay, it will consolidate, it will test this support level before bouncing back up. Okay, then after that, forming a bull flag before going up higher. Okay, so one thing to note about bull flag is that if the bull flag is consolidating at the high of the chart, meaning that it's something, let me just draw it. Okay, so the price is going up, then after that, there is a huge bull flag that is consolidating within here. Okay, so this is something you guys should be careful, because this could potentially be a false breakout where the price, okay, goes above, breaks out of this consolidation, but then after that, it tends to be a fake fake breakout. Then the price will come back down to correct itself. Okay, so that is one thing you guys need to take note of. For bullish flag to be most effective, it should be forming at the lower end of the chart itself and not the higher end. All right. So moving forward to pendant, pendant is similar pattern itself. There will be a flagpole, just that the consolidation over here is not a rectangular consolidation, rather it's a triangular consolidation. Okay, so you see over here, the price come in, do consolidating inside this triangle, okay, before breaking up to the further upside. All right. Okay, so moving forward, next is the bearish flag and bearish pendant. It's the flip opposite of the bullish flag itself, bullish flag and bullish pendant. Okay, so over here, the price face resistance at this point. So what happens? The price drop. Okay, price drop, then came into this the consolidation channel. Okay, so this is also called a bear flag. Okay, this happened because some traders that shorted from here will be looking to lock in the profit over here. Then after that, the price will go up. Then those who missed the short, okay, were short at this level, causing the price to go down. Okay, so this happens before breaking down, before the price broke down and continue its further downside. Okay, likewise for a bearish pendant, okay, bearish pendant is the same. Is just that the consolidation take place in the triangle pattern. All right. Okay. So next we will be looking at the bullish rectangle. Okay, so this pattern is easily identified by at least two similar highs and two similar lows. Okay. Over here, what they are referring to is these two similar highs as well as two similar lows. Okay, so if rally are on heavy volume, then the formation is probably a continuation in the uptrend. All right. If the heavier volume is on the downside, then it can be considered a possible trend reversal. Okay, bearish rectangle. Bearish rectangle is exactly the flip side of bullish rectangle itself. Okay, we see that there are at least two, okay, similar highs and similar lows. Okay, then the price consolidated within this rectangular channel before breaking down. All right, so we have come to the end of our fundamentals. So far, do you guys have any questions on this continuation pattern? Okay, I will just wait 1 or 2 minutes to answer some of the questions. Okay, keep your questions coming in, guys. Okay, I see that there's not much question, so let us quickly take a look at the live charts and see. Okay, I will show you some of the patterns that we went through just now. Okay, so let me just open up this Euro USD, take away all these drawings. Okay, switching over to H4. Okay, H4 time frame. Okay, this is one of the wedge pattern that was previously formed in Euro USD itself. Okay, so let me just draw it out. Okay, it should be somewhere here. Okay, so this is the upper trend line, okay, of the wedge. Then let me draw out the lower trend line itself. Okay, so lower trend line over here is right across all these price action. Okay, so previously what's happening is that we see that euro dollar is dropping, okay, dropping before coming into this wedge channel, okay, where the price action wherever the price touches this upper trend line, it would face resistance and drop to this lower trend line support. Okay, this continue on for quite some times. You see all the way from 18 June all the way to 26 around 26 July. So it's almost 1 month. Okay, 1 month of consolidation before it breaks out, come back to retest, then continue higher. Okay, all right. So for this wedge pattern, every time there is a continuation pattern, we don't just based on the the pattern itself. We need to combine it together with other indicators like RSI, stochastic, and MACD to give us a better better conviction that the price action is going to move on the upside. Okay, so let me just put in some indicators over here. Okay, let me just adjust some of the indicators parameter. Okay, so I've put up RSI, stochastic, as well as MACD. Okay, so what we can see from here is the price is, you see the price is going lower, making lower high and lower low. Okay, but on the flip side, if you take a look at, let's look at RSI first. Okay, if you look at RSI, what is the price action? What is the RSI showing us? Okay, RSI is is trending up, okay, making a negative bullish divergence, okay, negative divergence. Okay, likewise let me go to MACD first. MACD is showing a similar pattern. Okay, making MACD is moving up, whereas the price action is moving down. Okay, so this is a typical of a negative divergence where the price action where there could potentially be a bullish reversal. Okay, so let us go down to the stochastic. Okay, so for stochastic, it's a bit different. Okay, so let me just put up what's the difference. Okay, so stochastic, if you see over here, okay, let me just put the support and resistance level. Okay, this should be our resistance. Okay, in stochastic itself, you see that I've identified the resistance level here and the support level here. So what happened is that wherever the price action touch this stochastic level, you can see, okay, that there will be a bounce once wherever the stochastic drop to this level. Okay, at the same time, if the stochastic just bounce towards this resistance, okay, the price action will drop also. All right. So in terms of identifying patterns, it works best if you can put in some other indicator during your analysis as well. All right. Okay. I have question coming in from Nohana. Nohana, at which time frame do you look at this? Okay. So okay, it depends, Nohana. It depends. It depends on whether you are a swing trader, you are a scalper, or a long-term trader. Okay, so for for swing trader, right? For swing trader, you should potentially look at the H4 as well as the daily time frame. Okay, so for those scalper and short-term trader, they usually look at 1 hour. Then they will go down to the 30-minute itself. Okay, so if any price action lower than 30-minute, right? I find that there are a lot of noises, so it tends to be more volatile. So if you want a better perspective or a bigger picture, H4 is the best time frame for you to analyze for swing traders. All right. Okay, so Naveen, in this example, how do we determine the trend will go up? Okay, so how do we determine? Okay, so firstly, okay, so what happened here is that let me just go over to the daily time frame. Okay, so daily time frame over here, you see that the price has dropped a lot. Okay, ideal. Okay, there should be some support level down here. Okay, if I take out the fib retracement. Okay, 78.6 is too far away. Let me just take a look. If I put some fib extension, okay, so for fib extension and fib retracement over here, we see that the price has come down to it. So what happened is that when the price is dropping, okay, then after that we identify this wedge itself. Okay, so this wedge is showing us the price action is showing us that the price is going down, whereas our indicator itself is showing us that it's going up. So this is what we call a negative divergence. Okay, for negative divergence, if the price action broke out, broke out in either way. Sorry, if the price action consolidated here, okay, if the price is going down, that means that there is a potential of the price going up once it breaks the upper trend line wedge itself. Okay, so this is a typical bullish negative divergent reversal pattern. Okay, that most of the trader will monitor it. All right, I hope this answers your question, Naveen. Okay, so let us quickly take a look at another example of triangle pattern. Okay, triangle pattern. Let me just try to find the triangle pattern that we saw previously. Okay, so this triangle pattern. Okay, let me just take it away. Okay, so the next chart we are going to is the Kiwi dollar itself, Kiwi dollars. So Kiwi dollar previously, just I think 2 weeks ago or so, it was in a symmetrical pattern consolidation. Let me just draw it out. Okay, changing it to wait for resistance. Okay, so this was a triangle pattern that was forming in Kiwi dollar just few weeks ago. So remember what we go through in the lecture notes. Okay, so the price continuation, okay, need to have a prerequisite. So this prerequisite is the price is dropping from here. Okay, then the price over here, the price just consolidated sideways. Then over here it start to form a symmetrical triangle. Okay, so this symmetrical triangle, if you guys remember, it's harder to justify which direction it will break out. So the best way to play it will be wait for the price action to break either on the upside or either on the downside. Okay, so what happened here over here? What happened over here is that the price action drop to the break to the downside, continuing its bearish pattern. All right. So if you guys remember just now we talked about the price target. Okay, let me just roughly show you how it's measured. We measure from the top all the way to the bottom. Okay, changing to red color. Copy, paste, and drag it down over here. Okay. Okay, so we see over here, the price go even lower than the target price itself. Okay, the target price for this symmetrical triangle is only just roughly here, but because of the a lot of people shorting it, the price go even lower. That is why just now I mentioned that okay, for this kind of measurement is just an estimation of the price target. Okay. Okay, so far so clear for you guys. Okay, so let me take away the MACD not needed. Okay, let me just show you some of the fail patterns that happened previously. Okay, so this one was previously at the this price action for gold itself. Okay, let me just try to find where it is. It has been quite some time already. Okay, I think it's this gold pattern. Over here, previously gold was forming this let me see, this ascending triangle. Okay, ascending triangle right here. Okay. So this ascending triangle you see over here, the gold price action was consolidating over in this area itself. Okay. Then at the end of the triangle, it break up to the upside. Okay. But shortly after it failed, you see over here there is a consolidation. Okay. But it failed, then come down again. Okay, so if you guys remember this flagpole pattern, bullish flagpole itself, just in the presentation itself, I mentioned that the bullish flagpole, right, if it is formed at the high of the price action, okay, the tendency of failure will be higher, much more higher. Okay, as a result, over here you see, even though there is a bull flag, okay, and the price consolidated, but then it failed and dropped again. All right. So for this target price, let me just take a look. Okay, if I put it over here, okay, the measurement for this this ascending triangle breakout, right, is supposed to be here. Okay, it's supposed to be here, estimated price target. But you see the price action, surprisingly, it does not go all the way up. It just reverse off in the middle of this resistance itself. So as such, right, this I do emphasize that this measurement, this kind of measurement is only for estimation purpose only. All right. All right. So far, do you guys have any questions on the educational webinar that we just went through? Okay, let me try to find a bull flag at the bottom of the price action to see whether you guys, so that you guys can have a better view of it. Okay, over here, there might be a slight bull flag. Okay, so the chart I'm looking now is the pound dollar hourly chart. Okay, we see over here the pound dollar, okay, drop all the way until this level itself. Okay, consolidated within this support before moving up, okay, before reversing, before bouncing over here. Okay, so over here there is a sort of a small bull flag where the price consolidated within this resistance and as well as this support. Okay, so this price action just happened yesterday. Then after, shortly after consolidation, the price broke up to the upside. Okay, so this is the example that I'm showing you. The bull flag should in order for the bull flag to work out nicely, it should ultimately be forming at the lower end of the price action, price channel itself. All right. Okay, Nohana, I see that you requested for oil. Okay, for oil, if you need some help or to review the oil chart pattern, right? You can tune into our XM webinar on Monday, Wednesday, and Friday. So this is our exclusive Adverse Fortune group together with XM. Okay, we provide fundamental analysis as well as technical analysis for this 3 days itself. For Tuesday and Thursday, it's more of like a educational webinar, okay, for retail traders, where our aim is to educate retail traders to equip them with more, more knowledge in the forex market itself. All right, so I hope that answers your question, Ohana. Okay, so for today, we will be focusing more on educational rather than reviewing the technical charts. All right, so far, do you guys have any questions for me? All right. With that, we have come to the end of our education webinar. Okay. Okay, do remember to sign in for our webinar, XM webinar right over here at the website below. So tomorrow is our exclusive webinar where we go through the fundamentals as well as technical for the day itself. Okay, and next Tuesday, coming Thursday, we have another educational webinar on trend indicators. Okay, so do sign up for this where you will get the the best trend indicators that pro trader use to go into to open up their position itself. All right. So with that, thank you everyone for joining me. Trade safe, stay safe, and we will see you again tomorrow. Goodbye.